The biggest real estate news that we've been hearing lately is that the market is starting to change. Our market has been what they call a seller's market since the early 2010s, shortly after we came out of the financial crisis in 2008. After 12, 13, 14 years, finally seeing some change, which is a long time. We're moving more towards a neutral and in some areas more of a buyer's market. But what does that mean? Well, what they're talking about is economics 101. We're talking about supply and demand. So when it's a seller's market, you're talking about low inventory, high demand, and prices are usually going up, short days on market, and it favors the sellers because there's not a lot of competition. A neutral market is when it's kind of balanced. The supply and demand are kind of keeping up with each other. And then there's the buyer's market. And buyer's market is when the inventory is higher than the demand, so that buyers have a lot more to choose from, and you start seeing prices come down, days on market take a little longer to sell. So we're finally moving a little bit to more of a neutral, and in some local markets, even a buyer's market. One way economists determine whether something is strong, a buyer's market, neutral, or seller, they do this thing that's called month supply, and they look at how many properties on average sell a month and how many are on the market, and they come up with a number. And basically, if the number is higher, that means there's higher month supply of inventory, it favors buyers. The lower the number, it favors sellers. We've been in the low numbers. It's starting to change a little bit higher. But if you want more information, we're happy to run those numbers for you for your specific property you're looking at in the specific neighborhood. But that's what you're hearing. Well, that's where we're starting to see a little bit of change.